Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in today's live stream, we're going to start by looking at the US dollar, what the market is doing so far. And looking at the US dollar currently, as you can see, we have a run on buy side liquidity right here. And if we scale down to the weekly time frame to have a better understanding what the market is doing, as you can see right here, we'll have a high resistance liquidity, and price has mitigated that high resistance liquidity, took liquidity from this previous high, which is also a high resistance liquidity as well. So what we're now watching is to see whether price is going to continue higher or whether we can potentially see a reversal from this key level. Personally, I'm not really seeing much within this point of interest. There's not really so much I'm seeing that looks exciting from this key level. The only thing I can see right here is the fact that we had an impulse and then a displacement to the downside, rejecting, and then prices coming back up. So what we rejected here, as you can see, is also a very significant key level, because on the daily time frame, this is our low, this is our high, and this is our low, and this is our higher high. So price coming down here, if we're bullish, this would be a perfect area for us to see a rejection and potential continuation to the upside. Now, one of the major reasons why I'm not really so keen on looking for a sell on the US dollar is because the 12-month time frame, as you can see, as I've always talked about right here, is still within a bearish range, lower high and the lower low resting right here. So anything can happen within this range and price could potentially continue higher until we break above this range lower high, this lower high range. Until we break above this high, I still wouldn't be surprised if I see a rejection and potential move to the downside on the dollar. That is 100% possible. But as you can see so far, price is holding up strong and it's showing momentum like it wants to continue to the upside. Personally, I'm not looking for any sell or any buy on the US dollar or USDXXX pairs. For example, looking at the if we're looking at the USD card, for example, like I've always stated about the USD card, irrespective of the fact that every down move right here, I called it on the live stream, I never entered any of them. And the reason is because I don't like the price action. In as much as it's coming to the downside, I'm still seeing a lot of bullishness. The fact that price consistently keeps coming up and up and up, it's showing me that telltale sign that this might want to run a buy side liquidity. And as you can see, eventually, like I said previously last week, eventually you can see what eventually happened. Price rallied to the upside, took out all the buy side liquidities, every single trader that was trying to sell this, forgetting the fact that we have a low resistance liquidity and also a low resistance liquidity resting right here. You can see how price came back up, wiped them clean, and took them all out of the market. Now, that being said, this is one of the reasons why most of the time, if I have a feeling due to what I'm seeing on the chart and I'm feeling like this is not going to be a high probability setup, I just don't trade it. And the reason is what you see right here. When a trade is not a high probability setup and you take that trade, there's a high chance you could take a loss. Now, we're not trying to avoid taking losses. We're only trying to mitigate the losses and minimize it and make sure we're taking the minimal losses and then we're making the maximum profits. So that is the reason why I'm not really keen on trying to sell USD card, and I'm also not interested in trying to buy it. If we look at it on the 12-month time frame, you can see very clearly we have a low right here. Right here we'll have a low. Right here we'll have a high. and then right here we'll have a lower low. So that means this is giving me a telltale sign. This right here is a potential break of structure to the downside. So this entire move to the upside could be a reaccumulation for shorts, and then price could potentially drop to the downside due to whatever reason that we do not know. Price could potentially reject through a key level on the higher time frame and then just continue to the downside. So that is why personally I'm not interested in trying to buy USD card, but at the same time I'm also not selling it because I don't like the structure it's showing me on the smaller time frame. Looking at the 4-hour daily time frame, we still have a low here and this high. So until this major low gets broken, anything can happen. Price can still decide to run the buy side liquidity. So that is what I'm watching on USD card. If you do have any questions, feel free to drop it in the chat. I'm also going to share as well my analysis on Aussie dollar and what I'm anticipating to see in the marketplace. So yesterday a trade was posted by me on Aussie, and I was anticipating for a move to the upside on Aussie. I was looking forward to see Aussie continue higher, and my reason for that was because overall on the 12-month time frame, Aussie is bullish. We'll have a high, low, higher high, break of structure right here. Price came down, mitigated this inefficiency, took liquidity, and then we're seeing this rejection. We also have the consequent encroachment as well, and price still mitigated the consequent encroachment. Right here after that mitigation, we saw this impulse move to the upside. Now, as you can see, we also have a monthly break of structure here. Then after that, we had this move to the downside, expansion, move to the downside, another expansion. So personally, if we start to scale down to the daily time frame, we can see clearly we'll have a high, we'll have a low, we'll have a significant break of structure right here. So what I'm anticipating to see, I'm going to use a clear chart so we can just see this very much clearer. So what I'm anticipating to see right here, so we have this high and we have this low, and this right here is a break of structure. After this break of structure, the next thing I want to see is a potential retracement into this down close candle, either for price to mitigate it, the borders of the candle, or run liquidity from the sell side liquidity. So price can still decide to run this sell side liquidity, very 100% possible, but I really wouldn't want to see that happen, because if it happens, that could still mean a shift in market structure on the 4-hour time frame. Because if we go to the 4-hour time frame, right here, you can see on the 4-hour time frame, price is consistently creating this highs and lows resting right here. So right here we have low, high, low, higher high, higher low, and a higher high resting right here. So in as much as we still have this inefficiency resting right here, and price can decide to come down to mitigate this inefficiency before continuing to the upside, I really wouldn't want to see that happen, because if we do drop below this low, that violates this 4-hour bullish structure. So rather than us see that, I will most likely prefer to see price have a reaccumulation from this zone and then a potential continuation to the upside. Because this zone, if we're using the Fibonacci from this low to this high, this zone right here is our extreme discount. So if we want to see a potential reaccumulation, this area would be a perfect area to anticipate for a reaccumulation and then potential continuation to the upside. And if we're going to the upside, I'll be targeting the low resistance liquidity zones like this one right here, another low resistance liquidity zone like this one as well. This would be my key areas where I'll be anticipating for price to rally above these key levels, running out these liquidities. And if we go to the daily time frame as well, we can see inefficiency resting right here. That could potentially also act as a draw on liquidity. Another one is if we go to weekly time frame, we can also see on the weekly time frame this inefficiency resting right here as well could be a magnet to attract price to the upside. So that is why, irrespective of the fact that even though this trade setup looks a little bit complicated, because of how price came very close to the lows, took liquidity from this low. All I wanted to see was a run on liquidity, a break of structure on the 15 minutes time frame. The moment I saw that right here, if we go to 15 minutes time frame, you can see that very clearly. So the moment I saw the high, the low, and the break of structure right here, I wanted to see a retest and then look for a 3-minute shift of market structure and buy. But unfortunately, when I got in yesterday from the 3-minute shift of market structure, so this was the trade setup. So this right here, after I saw this right here, so price came to the downside. This was the high, the low, and then break of structure. This was our entry right here. We used this key level as an entry. Price came back, mitigated us, took us in, expanded higher. I trailed my stop loss to 50% of the risk in order to reduce the risk. But unfortunately, I moved stop loss way too soon. And look what happened. Price came down, took those stop losses, because the algorithm understands that there's going to be people that will trail the stop loss early on, and it just came reversed, wiped them all out, continued high. I also saw this one. This was a high, a low, a break of structure. This would have been a re-entry for me, but I didn't really get in because it was basically when I was just driving and heading home, so I couldn't really park on the streets and start trying to get in on the trade. I don't do that. I always like to be in a relaxed environment before I place any trade. But unfortunately, I missed this second entry. So after missing this second entry, what I did was I just went to 30 minutes time frame, because I have an understanding that my point of interest is also a daily key level, because we have a daily high, daily low, and then a daily break of structure on the daily time frame. So that means this key level right here, which is my point of interest, is also significant on the daily time frame. This low right here, liquidity that got taken, is also on the daily time frame, which means I will also need to see a 30-minute shift of market structure for me to be confident to look for a buy. And right now, if we're looking at the 30 minutes time frame, you can see on the 30 minutes time frame right here, we also have a significant high, a significant low, and then we broke structure right here. Now, what I was looking at is, when I see a break of structure, I just don't want to see a break of structure and a close. I want to see a close above any wicks. Let me explain what I mean. So right here is the high, this is the low. We broke structure here and we closed above this high. But you can see that this key level right here wicked this high, but it didn't close above it. Let me make this very big so you can see what I'm talking about. So right here, we have this high. I'll outline the high as well. We have this high resting right here. And then we'll have this low. Right here, you can see price wicked above the previous high, but it didn't break above it, dropped down, broke the structure, closed above it. Now, because of this wick right here, I'm not going to regard this as a break of structure, because I want to see this bodies of the candle close above this wicks. Any wick above this high, I want to see a candle closure above it. And right here, there was no candle closure. Price went to the downside, mitigated this key level, and then expanded higher. And look right here as well. There was no candle closure here as well. As you can see very clearly, there wasn't any candle closure. So I still don't regard this as a break of structure. If this had closed above this one, I would have regarded that as a break of structure on 30 minutes time frame. Now, the fact that this didn't break and close above this key level, this new wicks, I will disregard this. And then price still went to the downside, expanded higher. This was when I now said, yes, this is a break of structure on 30 minutes time frame. Because as you can see very clearly, this expansion broke above this key level, and it closed above it. I just want to see, even if it's one pip close above those wicks, I want to see that. And right here, you can see that very clearly. The moment price broke above it, closed, this became my last down close candle before an expansion that broke structure. So right here, this becomes my point of interest. where I want to see a reaccumulation before a potential continuation to the upside. If we're bullish and these lows will stay sustained, then this would be a perfect area for me to start looking for a buy. Now, after outlining this key level as my point of interest, I now start to go to other higher time frames to look for significant things that could bring price to that position. Things like inefficiency, as you can see right there, there's a fair value gap or an inefficiency, an imbalance, or whatever you call it. There's one resting right there, very significant. We'll go to 2-hour time frame. And on 2-hour time frame, there's nothing there. 3-hour time frame. 3-hour time frame, as you can see on 3-hour time frame, there's an inefficiency resting right there. So that it's giving me a telltale sign that this key level is a high probability area. If we're going to continue higher, I would anticipate to see a reaction. I would anticipate to see price retrace into this key level. If we were to continue higher, I will potentially look for a reaction from there to buy. So that means that key level, I've seen several reasons why it's a high probability area to wait for price to retrace into, because we have 3-hour inefficiency, 1-hour inefficiency, 30 minutes down close candle as well present, being this key level. So all I want to see from this key level is a 4-minute shift of market structure. Why 4 minutes? I just count 3 time frames to the left, 1, 2, 3, and then so you can see right there, I go to my 4-minute time frame. I'm looking for my highs, my lows. So you can see we have a high, we'll have a low, we'll have a high right here, and then we have this low. Eventually, after price created the high, the low, failed to run the liquidity on the low, broke structure right here very significantly. The moment I saw this break of structure, the next thing I want to do is to use the high as my entry, irrespective of the fact that this was the last down close candle. Perfect area to pull an entry, but I didn't use it. The reason I didn't use this key level is because if I use this key level, there's a very high chance I'm not going to be activated into that trade. So what I do is I use the high, because I don't know whatever broker you're using. And your broker, you can actually put the limit order right here and you won't really get activated because of maybe spread or slippage or whatever. So that is why the high is my entry. My stop loss was supposed to be 6.8 right here, but I just gave it a little more room around this key level. So right here is my stop loss, and then my take profit position still remains the same. My overall draw on liquidity on the bigger time frame. So we'll start to scale down to the bigger time frame. We'll go to 1-hour time frame, go to 4-hour time frame. Right here will be my first take profit position, which is a 1:11. Right here will be my second take profit position, 1:13. And right here would be the third position, 1:15. And my overall take profit position is right here, 1:18. So it's an 18% move to the upside, 2% move in total, but in risk to reward ratio, it's 18.29% move to the upside. So hopefully this plays out, and we can all make some good percentage for the weeks. Don't forget, CPI is coming out tomorrow. Is going to be these CPI numbers coming out. It's going to bring in a lot of volatility. It could be positive, it could be negative to your trading account. So the main thing is, if you're in profit before the CPI numbers come out, you can do one or two things. Either you close the trade, take whatever you've made, or you can trail stop loss to break even. If anything happens, you just leave the market with what you've made. But for me personally, on my account, if my trade setup is in profits and we've broken significant structures, I'll just trail my stop loss to break even. It's a risk-free trade. If the worst case scenario that happens is the market reverses on me and I leave the market making nothing, that's gonna be the worst case scenario. And the best case scenario would be for price to go towards my direction, hitting my key levels. One thing I never do is to try to complicate things with the high impact news coming out. If the high impact news is coming out, it doesn't really mean for me to just close my setups and run away. I really don't do that. I'll just, the only thing I can do is to protect the trade, protect my accounts, my capital, throw stop loss to break even. If the high impact news comes out favorable to me, great. If it doesn't favor me, that's also okay. At the end of the day, I'm not trading the high impact news. I am trading my concept. And my concept, if it's showing me to buy, whether there's a high impact news or not, I'm looking for a buy. If it's showing me to sell, whether there's a high impact news or not, I'm looking for sell. It doesn't really matter whether there's any high impact news that is going to be available at that time of day or anything like that. I'm only focusing on what I'm seeing in the marketplace. The structure, is it bullish or bearish? If it's bullish, I'm looking for a buy. I don't really mind whether there's going to be high impact news or not. I'm just focusing on where is the market going, and I'm looking for opportunities to buy it. So that is my analysis on Aussie dollar. We're still in the trades and about 0.5% in profit so far. It was up over 1% in profit this morning. And also, this trade was posted around 5 a.m. this morning, London time. And I know a lot of people probably still sleeping by then, but there's not really so much I can do about it. It's either that or we just missed the trade. So a lot of the times, literally most days, I'm awake by 5 a.m. to look at the charts, look at my alerts, where I've put alerts on what is the market doing. If I'm seeing what I want to see at those times of day, even though it's too early, I'm just gonna have to take the trade setup. If it's on pairs like Aussie or gold, I'm gonna take the trade, or oil, I'm gonna take the trade. But if it's on a pair like Euro US dollar, it's going to be a little bit hard for me to take trades by that time of day, because Euro US dollar tend to really do well within the London session and New York session. But Aussie it tends to be a little bit unpredictable sometimes because of the Australian time. So sometimes I really don't try to put too much time and price on Aussie, because Aussie can literally explode by 12 a.m. or 2 a.m. It can literally have exponential expansion to the upside. But euro, I really don't expect such moves on euro, on the pound as well. And the reason is because of the time for the euro working with the London session and the New York section. So that is probably why you must have gotten the alert for the trade idea on Aussie really very early, but there isn't really so much I can do about that. It's just when I see it, I take the trade and I share with you as well what I'm taking, my entries, stop loss, take profit, and everything. So that is my analysis on Aussie and also on the dollar as well. If you do have any questions, feel free to drop in the chat. So in the next session, we're going to look at other pairs. We're going to look at US oil, look at Euro US dollar, and we'll also look at the indices as well to see what the market is doing and whether there's going to be any opportunity for us. And we'll also look at Ethereum. My alert's just been hitting, so I'm just going to have to go to the chart to really see what Ethereum is doing, because the key level I marked out on Ethereum price has mitigated that position. So I'll be watching that very closely in case we do see a buy setup form on Ethereum. That would be a very phenomenal trade. So right here is the key level I'm watching. This right here is my point of interest. So if I can see price coming here, it's taking quite some time to come down into my key level. It's remaining about 2.6%, which is not really much for crypto. They can do that in a minute, but anything can happen. The price can decide to take a lot of time before it gets there. But personally, what I'm watching is potentially for price to come in here, and then if we do come in here, that's going to be a discount zone on daily, as you can see, using the Fibonacci from the high to the low. This key level right here, anything below this is discount. If price can give us that discount and then we see a shift in market structure on the smaller time frame, I'll be looking for an explosive buy on Ethereum, and this trade could potentially give us at least a 8% to 10% for the first entry, and second entry could potentially even give us more than that. But if any trade I'm getting into right here, I'm going to share with you. I'm going to do a full-blown analysis on this one in the next live stream, but I'm just wrapping up on this one. But any trade entry I'm getting in on Ethereum So right here, this is my low and this is my high, and this is a 38% move to the upside. If I should get into any trade setup at the discount zone, I'll be anticipating for that trade to deliver a 30%, 38% move to the upside, and 38% move to the upside is literally right here. And what do you see resting right here? Low resistance liquidity. Let me show that to you very clearly so you can see that as well. So right there, you can see what is resting right here, a low resistance liquidity. 38% move to the upside. That means if we're literally catching that move on a smaller time frame, 5 minutes, that's a minimum of 1:10, 10% on one trade. For the first entry, second entry could also deliver another 15%. So this trade can deliver an explosive price action that could give us like a 25% on just one trade, which literally is mind-blowing. So that is why I've been waiting. The thing with trading cryptos is you need to have that next level patience. This trade, like the other trade I took on Ethereum, it was around so basically after this high got broken, we had this retest. This retest was my first entry, and then I waited for a 2 minutes break of structure here, got in for a second entry, and then I rode the wave to this highs. So right here around this key level was my take profit. So price just took me out, and I was out, and I was just waiting. And the reason why I got out from that key level was because we have this low resistance liquidities resting right here. So that was the reason why this key level was my take profit position. So the moment price hits here, I just got out. It just took me out because I knew there's still going to be some level of retracement before another impulse move. So I just took what I made on that one. That was 25%. First entry delivered 10%. Second entry delivered 15%. So that is still what I'm watching this as well. If I can catch another move like that, that will still deliver at least 15 to 20% or more. And that will absolutely be phenomenal. And I'll be watching it very closely. And if you do have any questions based off my analysis on Ethereum as well, feel free to drop it in the chat. I appreciate you all, and I'll talk to you all next time. Have an amazing day, everyone.